Now, the latest mining report from Grant Thornton indicate that more than half of South Africa's junior miners see securing capital as a key constraint. It also revealed that more than half of the junior miners reported cash balances of less than $2 million. Joining us now to discuss challenges and prospects in South African mining, South Africa's mining industry is Neil Garden. He's the director at New Africa Mining Fund. Neil, thank you so much for joining us. Now, of course, the picture that Grant Thornton is painting is quite bleak. Concerns about security of enterprises and tenure in South Africa, uncertainty around mining policy. A lot of these issues have been put to rest by the political players. Why does it remain a concern, and more importantly, how does it impact on junior miners?
Well, mining is a risky business, and it's a difficult business. And even the big miners are having problems these days in trying to stay alive in uncertain times. The problems in Europe, just general economic downturns throughout the world. And of course, the junior miners are battling to raise money for that. And we've seen that in our fund. We've had lots and lots of companies coming to us looking for funds for their junior operations. And they're not easy. The juniors in South Africa are certainly struggling. And that's, I think, true across the entire African continent, which we look at in general. So, yes, we've seen a lot of difficulties that these guys have had in the past year in particular.
Now, of course, one of the difficulties that you've identified is access to capital. We know that in South Africa, gold mining, for example, is very expensive because the gold is so deep down in the ground. And of course, you've got volatility, you've got commodity prices, fluctuating. And as you said, quite a risky business. But a lot has also to be said about the kind of planning that companies are doing. It's not as if we're selling beer if one talks about the platinum industry, yes. To quote one famous trade union leader. What can mining companies do, particularly junior miners, to plan better, to keep overheads low, to not pad on those helipads for helicopters and fat bonus salaries, to remain competitive in a global economy that remains sluggish?
Yeah, I think that you have to remember that miners are price takers and not price setters. So if you're selling beer, you can set the price of the beer that you want to sell. With selling coal or platinum or anything else, the market determines that. So you are at the whim of the market. And if the market comes down, and you were saying about platinum is in dire straits at the moment in many ways, because there's an excess of supply. There's a lack of demand, particularly out of Europe. The diesel car sales in Europe are not taking up the slack. So these are all things that have to be taken into account. But I think in general, yes, watching your costs in mining, particularly in junior mining, is imperative. And you have to be very careful about that. And what sort of salaries people get paid, that's right from the top all the way down to the bottom. And one has to watch those costs very, very carefully.
And if one looks at the operations of junior miners, are they doing that? Are they cost managing effectively?
Well, I think that they're being forced to do that. There's not a lot of leeway. Coal mining is another one that's taking a lot of strain. A lot of the junior coal miners in this country at the moment are not doing very well, and you can see that reflected in their share prices. They haven't been doing well, and certainly there's not big dividends coming out of any of them. And it's tough. It's tough out there.
Now, given the fact that it is such a tough environment, and that people are not very keen on taking the kinds of risk that one would generally associate with the sector, what are the prospects for junior miners, not just in South Africa, but in the continent at large, against the background of gas finds, oil finds, in places that we would ordinarily not think of, places like Malawi? We know in Mozambique the gas finds have been really interesting off the coast of Namibia. It looks quite alluring in many ways, but of course very, very cash intensive expensive and very high risk.
Yes, capital expenditure and getting new ventures going, whether it's oil or gas or mining, are enormous. We've just been looking at a project up in West Africa in the phosphate market, potash market, and these things are enormously expensive, capital intensive. You're talking in the billions of dollars that have got to be spent in order to get new ventures going, and for a junior mining company that is extremely difficult. And to try and raise that kind of capital when even the big guys can't even raise that kind of money, it's difficult.
Yeah. What are the kind of options given the constraints that we see? What are the kind of innovative ways that people are looking at to raise the kind of capital that is required? Well,
hopefully they'll come and talk to us. We are a small fund. We're one of the few private equity funds in Africa that is providing funds for junior mining companies. And but yes, it's coming to private equity kind of companies that but we're different from the usual retail market that most of the juniors have been tapping in the last decade. And I think you can see that reflected in the fact that they can't raise money on the retail market means that they're having to come more and more to the private equity and venture capital type markets that we are in, so that they can start to see whether there's capital available there.
And what has been the kind of uptake? How have people responded to your private equity fund? What are the kind of demands that people are making on your fund?
We've been going with that. This is the second fund that we're in now. The first fund we closed last year. And this fund, we've had more than 200 companies come to us with different projects asking for capital that they want us to invest in their projects. So there's a huge demand out there. Obviously, there's a lot of people that don't recognize the risks that are involved, and our job is to try and sift through all of those projects and see which ones might be the ones that we would be comfortable investing our money into. And because remember, it's not my money, it's money that we manage for other people. So we've got to be sure that we're going to invest that money wisely, and we can see sustainable development coming out of those investments. And that hasn't been easy. With constantly declining markets, both in terms of the commodity prices and in terms of the share prices that we've been looking at, it's difficult for us to make an investment. But we are looking at a number at the moment which we think we will invest in.